Hey guys, welcome to another edition of the Trade Genius Podcast. Bob and Phil here as usual. And we got a good one for you because Bob has found another reason why inflation may not be going away just yet. And that has implications on our portfolios. So let's dive in.
Trade Genius.
All right, Bob, explain this oil. What's going on?
Yeah, I mean, everybody keeps telling us that, oil is going to be driven into the floor and inflation is dead and the Fed has won. And I'm here to tell you that it's just another one of these, magic tricks by the powers that be to fool you. And what's been happening, obviously in the United States was the SPR, trying to basically manipulate the futures contracts by dumping oil onto the markets. But that's ending. And look at the inventory here. There's a couple of inventory charts that are showing we're driving into deficit here, Phil. We shouldn't be doing this in December, okay? December is when you should have a lot of builds because people aren't driving as much and they're still producing and getting ready for the next driving season, right? We should be in basically oil winter right now. Literally, the prices should be down and future builds should be up, but it's not happening. And then the other chart the same way. And look how consistently they're driving this thing down. They're just playing a game like they always do, Phil. Okay. Phil, you're telling me on Friday before the Christmas break that the PCE was flat month over month.
Yeah, on Friday, yeah.
That should raise alarm bells, don't you think?
Yeah, because that's what everybody's clamoring about is to see inflation ease so that they, the pivot bros want inflation to ease, right? But we're not a month over month, and we're not making any progress.
No, and the same with Japan too. With the Japanese yen, we can't overestimate how important it is that the Japanese yen is stopped falling. Okay, it's alarm bells for the risk on marketplace. And so we're going to be talking more and more about that. You guys are going to get very, very well versed into carry trades here because as that thing unwinds and oil prices go up, it's doubly problematic for the Japanese. That's the reason why Japan is raising, allowing their interest rates and their yen to rise is because they have to import energy. Okay. And if they thought energy prices were going to continue to fall, they would play their game of devaluing the yen, but they probably did the math on this, and they probably came to the conclusion that oil prices, energy prices are going to rise here, and we cannot lose our ability to import that energy and still run our economy. So we're going to have to take heat somewhere else. So with that chart, I want to throw my chart of oil up, Phil, and give you my perspective on the measured move. And for people that with our system here is that real quick topology lesson on our charting system. This is our algorithm kind of visualized. So we have one up there, and I believe is this a 4-hour chart, Phil? I can't read off the top.
This is a daily chart, actually.
Daily chart. This is a daily. So you see that gray bar that goes across the top of it? That's basically a range that's been capping the price movement here for quite a few months now. And that we watch for that level to get broken to form a new trading range higher. And so that's kind of been like a bearish sentiment, if you will. But on the bottom is our heat index, and that's our momentum indicator. And we usually go from that teal to that magenta and then back down again. But what we've gotten here is that the heat popped, and then we had a consolidation in price, and the heat popped again without going below the center line. And that was a dip buy move. And it's forming now an inverted head and shoulders here on the daily. They don't have to be flat, by the way, head and shoulder pattern. Just want to let everybody know that. They can be angled. And if that breaks out like we think it's going to break out, you're looking at a measured move, and it's an eye chart for me, Phil. Is that around 110 or 1?
Yeah, so if that breaks out, you highlighted $94.35.
Yeah. So, and then I'm on the conservative side of this. The average price of crude that they're expecting for 2023 is up to $113 a barrel. So this is just the next move that I'm expecting. I'm expecting that range to break, and I'm expecting price back into the 90s again. And, per my portfolio, I'm dip buying energy all the time. In fact, I just added VOC, pays a 13% dividend. And we had some really good trades with Schlumberger. earlier this week, Drillquip earlier this week. And so I'm just looking every time this thing's popping up on our bot. And Phil, can you maybe explain to people our bot? This is pretty cool what we do. It's a 4-hour bot, and it helps identify opportunities without you, Phil, and I have to intervening. It's just really presenting these heat and level buys for us.
Right. So yeah, basically in the Discord room, we have it automated so that when there is a higher time frame signal, such as the 4-hour, it's going to fire off an alert that, hey, this bar is firing off a buy signal. And and so we spread that amongst a number of different stocks, and we do it in crypto too, just because there's a lot to cover, right? So we just turn the bot loose, and it basically screens for the setups and then alerts us, and then everybody in the room gets it. You can then evaluate it on your chart, and whether you want to take it or not. You don't have to take it, because there's quite a number of different setups. So basically, you get alerted that, hey, now is the time to buy, because when you're trading and you're busy looking at your positions, it's tough to be able to have to screen for new candidates. So this thing takes all that legwork out of it. We handpick what we feel like are like good movers in this environment right now, so you don't have to worry about that. You get the signal, bring it up on your charts, decide if you want to take that entry or not. Totally up to you, but it's screening these candidates for you, and it takes a big chunk of time away, saves you a big chunk of time, I should say, in helping you find setups.
Yeah, and thanks for that, Phil. It's pretty cool to see in action. It'll actually warn you, then confirm. And so the reason why I bring that up is that because we curated these to put it where the market's going to be going in 2023, and so we like energy. We still like energy, and I think that the powers that be around the world are going to be very disappointed that we're going to be raising interest rates farther and higher than anybody is comfortable with. And if they don't, they're going to allow inflation to run hotter than it ought to. And so either way, it's going to be unpleasant for the politicians and for the population at large, unless you're like us and you're preparing ahead of time to be engaged in energy. And probably sometime in the spring, we'll be talking about food prices that are not going to fall either. And so you need to be positioned to outrun this nightmare that's coming, that is really energy costs. So with that, Phil, that's all I really wanted to talk about here. I think it's going to be a recurring theme, and until they get energy under control, and they need to get under control with higher supply, not keep curtailing demand, because that just keeps putting you in recessions. We're just going to keep repeating these policy mistakes.
I agree. Yeah. So there you have it, guys. Another Trade Genius podcast. Let us know your thoughts on this and your thoughts on energy going forward, and how you guys plan on tackling that, whether it's through your portfolio or just your monthly budget. We'd love to hear how you guys are viewing the situation with energy going forward. All right, guys, that's going to do it. Please hit like and subscribe. We appreciate your views, and we'll see you on the next one. Take care.
Trade Genius.